The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Our guest today will be Jeff Hughes, Alpha Insights, and we have an insight, and that is we want to thank Mr. Z for being on the show yesterday, right near, I guess it was pretty much the time when the market was making its bottom. If you recall, he was talking about the E-mini S&P. I want to bring this up here because I happened to save it, and then, of course, I've updated it. But if we just give me 1 second here, I'll get this up to take a look at it. There was a beautiful ABCD down there at that 4260. That was on the first. You notice how we came down and tested it? That's what Mr. Z was asking about, the fact that we were able to test that low with the higher bottoms. As you can see, that was a very important point. And then at the same time, what we did is we went and looked at the God Almighty NASDAQ, because that's the one that was doing the really, really interesting pattern. Also on the nature, hold on 1 second here, of the ABCD pattern, as we'll see it to take a look at this. That was a perfect ABCD down there, folks. It missed it by 10 points on the downside. We've had a huge rally so far this morning, and if those of you that pay attention to the videos and stuff that I sent out, I mentioned the fact that we had a really nice ABCD 382 Gartley coming in at 43.09 in the E-mini S&P, and we hit that. Then we backed all the way off to 42.97, and when we went above that, folks, there was no holds barred because it just took off and didn't look back. And there's a reason for that. You can see that NASDAQ chart. You know, that's a 7-day down move, so this could take us a rally easily. You can see the number there. It takes a rally on the NASDAQ could be all the way up to 149.50. 14,950, and we're only trading at 14,690. So, you know, it could go another 300 points. It might even do it. It might even do it. Do that. What are you looking at? 0.2364. That ratio don't count. Shut the front door and raise the rent. That's my opinion, dear, for whatever reason. And please disregard what I just said. But I don't see the number of times that 0.23 works. If it works this time, my hat's off to you. But by golly, I don't. I'm not. You don't have to go back into your hole. Sarah says hello, by the way. All right. Thanks for making. Let's take a look here. One of the markets we want to look at here is the FTSE. We'll be over. I spoke to Tom Hugard today, and he was telling me they're having a hard time getting gasoline over there in Bournemouth, England, where he lives, and it's really quite. They get food and stuff, but the shelves are not always filled. But they got some major problems in the UK, folks, with deliveries, and that's just about everything. Now I want to switch gears. Oh, here's what I wanted to show you. Here's what I want. There it is, right here. This is the NASDAQ that we sent out last night. We'll get this up here. It also had an S&P, did the same thing. We made a beautiful ABCD there. That's a 382 retracement, and the market came all the way down to 14,440. It dropped 100 handles. And once we went above that number, 14,548, folks, that's when everything took off. Because when that took off, it just splashed through there and away it went, and that tells us that we're probably going to have I think we're just about we're not even at the 786 of the yesterday, the high from the third, but that could happen, very, very easily. So those are just some of the ones that we're looking at here this morning. Now I was listening to Basil's show, and a gentleman was talking about the gold miners index, and this is something that I'm interested in because of the long-term implications of gold and silver, which I'm bullish on those longer term, but how much lower we're going to go, I don't know. But if we take a look at the gold miners index, remember, folks, these are the gold and silver miner index. All right. Now you'll notice here that's going to be a 3-drive pattern down here at a 1.618 expansion at 28.44. To me, that's the line in the sand. That's down a point from where we are right now. And with gold being down today, that might be able to get you to that point, but the actual number is 28.29. I shaded it by just a little bit at 28.44. And that's what I was looking at. It's a 3-drive bottom, and if you're interested in, and that's also 1.27 off of the March low. I didn't draw that in, but it's spot on right there. So you got about 4 or 5 things telling you that that's a good spot to take a look at the gold miner index. I will tell you this: it's much easier to buy it here at 28.44 than at 40.20 or 45.60. That much I can promise you. This pattern that we're looking at, folks, is the pattern that we did yesterday in the soybeans. We were buying the January soybeans at 12.43. They've already gone up $1,300 today, folks. So you booked the first $1,000, and if you're in the rest of it, put your stop at $500 profit on the remainder if you have 2 positions or more, and that way it'll do it. But had a really nice move today of 20-some cents, which basically it was grossly oversold right at a 3-drive pattern, just like the one we're looking at here in the Gold Miners Index. I sent it out. We talked about it. And so it's something that they don't always work. Look at the one that didn't work, of course, was the heating oil. That was a quick $400 loss. In fact, it was probably the fastest $400 losses you're ever going to take, because it happened when the Saudis were talking about changing the rules on the gold mines. So that's what we're paying attention to here today. But anyway, this gold miner index is a really nice chart. Today, we had a little bit of a rally beginning in gold, and then we backed off, and we think we're getting ready to have another big move up in gold, but we want to see what this retracement is going to be. The beautiful thing about the gold today, the high into morning after the high in the middle of the night was an exact 382 retracement up there at 1760, and it immediately broke $11 from that area. Again, that's showing us why we like that ratio so very much. I hope you forgive me about the comment about the 0.236, because folks, I keep this thing as simple as I possibly can. Simplicity beats complexity. I know there's a lot of Fibonacci ratios. You can start at 0.18, 0.236, 0.382, 0.44, 0.50, 0.526. I mean, I just use 4 ratios, folks. 618, 786, 127, 1.618, and then I use 382 for strong trending markets, and that's basically, what I'm looking at. I don't look at anything more than that, and you don't really need to. Just take a look at this DAX chart, this is pretty much what Tom trades all the time. This is the DAX, and you can see here the really nice ABCD patterns. You can see the 61% retracements. My goodness, I mean, this is over a 4 or 5 day period. What more do you need? Well, you probably need more, but I'm just giving you my 2 cents worth. And as I've always said, if you overpay, it's your own fault. So let's remind ourselves of that, folks. I want to tell you something that I always told Tommy O'Brien, that someday that if I found something better than TFNN, I was going to be leaving. So I'm giving my notice today. I'm going to work for Tesla Motors. And I'm going to make a charge against them for sexual harassment. Some dude got $157 million for racial discrimination. Shut the front door and raise the rent. Are you kidding me? Holy bucket.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted the chart of the soybeans, the January soybeans, showing you that nice little move. We also bought the euro. That's got a nice profit in it. If you're in that, of course, you don't want it to go to a loss. Now, it hasn't gave you a first profit objective as of yet, but at least it started, in the right direction. So we want to remind ourselves that sometimes they win, sometimes they lose. It's not the question of how much you make; it's how much you don't lose. And remember Warren Buffett's main rules. Number 1, don't lose money. Rule number 2, don't break rule number 1. But you got to take a risk sometime in your life, folks. And these are what we're looking at here are what we try to put up are the lowest risk that we possibly can. And I understand yesterday, I got a couple emails, the fact that we've had a run here and the fact that we ran into that head on into that heating oil. But there was nothing we could do about that. The timing on that, it hit the exact price just at the time as the Saudis were speaking, and that shot it up another 5 cents. But fortunately, that's why the stops are in, and you would have been out with around a $400 loss immediately. But fortunately, the soybeans made up for 2.5 times that today, and the euro's doing okay. And we are basically waiting to see a 3-day correction here in the stock market. The reason why we're looking for that, folks, if you remember, we spoken with Mr. Z yesterday, and the fact that we were making that very, very large ABC. We should go over this again because I covered this in the video last night. The fact that if we got much higher, we could easily, because that's we went down and we took out the lows of July, folks, in the NASDAQ, and then we've had this nice rally. This rally could extend all the way up to 14,950, and that would make it a 135 sale pattern. And look, you can't do it again. All I did was clone that line. After we came down to 14,820, we rallied up to 600 handles to 15,400. That's a $12,000 move in a bear market. So that's the one you want to be waiting for. That's why options are so doggone hard, folks, is because if you don't time that option just absolutely perfectly, you're in big trouble, because they tear you apart because of the time decay and then also for the premium. So unless you have perfect timing for your options, you just really can't do anything about it. So that's really what we're looking at right here. No matter what happens now, folks, you book some of your soybean profits and put your stop at break even on the other. The euro has not made that much yet. It's only up about $200, but you've got to at least put your stop at break even so you don't get in any trouble with that. That's the easiest way to do it. Now, I was sort of expecting to see the big move here in stocks early this morning, because I was looking at the AI forecast for what was today. And you can see here that we were looking for a high to come in sometime around 11 o'clock. And here we are at 11:30. But we're also 10 points higher than this chart posted, which was 43.44. We've been as high as 43.54. So that's a possibility. And it could be wrong. It could be one of those where it just goes up, 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 and up. And it could, because the market was so very, very oversold. That's the key to it, is the fact that you don't know, where these things are going to go. Just look at this, folks, just to show you where we are. Let me get this chart for the E-mini S&P, because I know a lot of you trade that. Just get this up here. The key to this is you can see the 382 there at 43.09. You see the market backed off all the way down to 42.98, I believe. And then once it went popping through there, it was no holding it back. And we've got all the way up to 43.55. The ABCD on this, folks, takes you to 43.90. And that's just a 61% retracement of the high on the 27th. And that high was 100 handles from the high that we made way back in early September. So this is it. We're watching these very, very closely, but we're getting really, really good swings and stuff. This is why you absolutely positively have to protect yourself when you're doing trading like this, folks, because the slightest thing can come out in the news and make these markets just move dramatically, one way or another. And that's why you've got to just stand aside, and there's nothing else you can absolutely do about it. You just got to get in there and bada bing, bada boom. If you're wrong, you just stand aside. There's nothing else you can possibly do. So that's it. We're almost at $80 in crude oil, boys and girls. Let's just double check. I think we're getting pretty close to hitting it. The euro's moving up a little faster, and we got the soybeans still moving good. This is what I like to see, making everybody happy. Oh, we just hit 12.65 in the beans, folks. That's a very, very nice move here. So let's remind ourselves that sometimes they win, sometimes they lose, sometimes they don't. Now, let me take a quick look here, because we got a few minutes here before we have Jeff Huge come up. I want to show you this. This is just a 15-minute chart on the gold, but the reason that's why I posted that GDX, because I was on the same train of what Basil was talking about, that this has a potential, that GDX has a really good long-term potential. But here is the 15-minute chart on the gold, and I will describe it as we go through here. Most of you already know what it means, but you'll notice we made that flash bottom down there at 1720. We were trying to buy at 1710. Then we made the ABCD down on the 30th, and then we had that humongous move. And that move took us all the way up. We've gone up to 72. That's a $52 run in a matter of 3 or 4 days. Now we're having the correction. So far, the correction from the low to the high, the correction has only been able to make slightly more than a 382 retracement. And I'm talking, about $4 more. And that's all it's been able to do. But what happened last night was the high that we made at that 1762 was a 382 retracement, and boom, we came down hard, but it stopped going down. It couldn't even take out the lows of yesterday, folks. That's a bullish sign in gold. It's really starting to look like it wants to have legs here. Now, all I'm waiting for is a smaller, pattern on the 15-minute chart that will give me a spot so I can enter with maybe an $8 stop and then have a pretty good. The only way you can enter it here is to buy on a 382 retracement, and the difference in that was only $3, so you can trade it for a $4 stop or $5 stop. I'm looking for a pattern where I can, be in it for maybe 3 or 4 days and have a pattern with maybe an $8 stop. So that's all I'm waiting for right now. As it looks right now, and I'll just draw this in, and I'll give you a little heads up of what we're going to be doing in the video tonight. I'll be looking at this pattern right here. This is the one I want to get up here and show you, because if we can get down here, that's going to give us a pretty good idea that we're going to be at the, hold on one second here. Really nice retracement. I hear they're talking about TLT. Folks, I've been saying how bad bonds are. I hope you finally believe me. I mean, these things, they don't have any friends, and they're not going to have any friends for quite some time, because they're going to be borrowing money hand over fist. The only way they can sell those bonds is to increase the rate of return on the bonds, increase interest. That causes more problems for the Treasury because they have to pay that interest, and that's what we're looking at. So remind ourselves. Now, if you're looking at the bonds on a really long-term basis here, I'm going to bring this up here. I'm not even going to put the patterns in because you can see them. They're all over the place. But look how the market has a very quiet rally from 158 to 160, a 2-point rally over 5 days. And look where it is now. Stay tuned for Jeff Hughes, Alpha Insights. We'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Jeff Hughes, Alpha Insights, on the line. How are you today, my friend?
I am doing very well, Larry. Thanks for having me on the show.
Well, you said the last time we were on, we were due for a pretty big break, and we've certainly got that, and it looks like we're having a little counter-trend rally today. I posted your chart for the S&P 500 quarterly. You want to start with that and tell the folks what you're looking at?
Sure. So are you talking about the cycle composite?
No, it just says the S&P 500 quarterly. That's the chart that you sent me with the top-down commentary.
Yeah. Okay. So this is the super cycle Elliott wave count that we've been following for some time now. And, really since 2009, where we put in what we believe to be a cycle degree fourth wave. And so the rally since 2009 has been a cycle degree fifth wave. We think it's probably terminated on September 2nd last month. And so from that, we can determine that there's going to be a corrective pattern of three waves that should retrace a significant portion of the entire bull market advance for the last 120 years. And so if that's the case, we're obviously not going to make a prediction that the market's going to crash by 4,000 points or anything like that. But, we're going to follow it with this kind of roadmap in mind. This is a chart that we've previously labeled the ugly in our Good, the Bad, and the Ugly series. So, the first step is really to establish that we've have a five-wave decline in place. And we think that we're on track to do that right now. I put a couple of other charts in the deck that I think kind of illustrate this on a shorter-term basis. But we're early in the process at this point.
Well, I wish I could pull up it says please see attached, but Jeff realized I am not very much of a technical person. That's the understatement of the year. So I don't see any attached charts. That's the problem. And that's my fault, not yours, my friend. What we'll do, Jeff, just on the next time we have you on, I'll connect you to the folks at TFNN, and you can give them the charts, and they can post them in the room for you, so that we can move them along at your pace and not having to worry too much about my pace. I have a couple questions from some of our listeners that have a great deal of interest in what you're doing here. And when you're talking about a correction coming, you're not talking about a crash scenario. You're just talking about a very substantial correction that we haven't seen in the past 5 or 6 years. Is that correct?
Yeah, and I would say it's probably we haven't seen a correction of the magnitude that we're suggesting really in the last decade. So, there's two time frames we're working with, more of a strategic time frame and then also a tactical time frame. And the tactical time frame right now suggests that the market is in, a intermediate term corrective pattern. So, we're basically putting in this seasonal sort of decline. We've actually identified October 20th as an important potential cycle turn date. It happens to be exactly a Fibonacci 34 trading days from the September 2nd high in the S&P 500. So during this kind of seasonal cyclical sort of period that has traditionally been difficult for equities in the fall, we expect stocks to be under pressure into that October 20th cycle turn date that I've outlined.
Now, what's interesting about this chart that we're looking at, folks, is I'm looking at October the 19th of 1987. And, looking at this chart, it was basically a non-event, Jeff.
I created a chart called That Was Then, This Is Now. And so what we did is we compared September 1987 to September of 2021 and tried to kind of sync up the timeline. And if we looked at the end of September, no one could have really anticipated a 30% plunge in the S&P 500 back in September of 1987. We had seen a pullback to about the 100-day moving average. We hadn't even broken trend yet. And what's different this time is not only have we penetrated the 100-day moving average, but we've penetrated trend, and we put in a lower swing low, and it's really the first lower swing low we've seen since the advance began in March of 2020. And so, this is, in our opinion, a significant change, and what really makes this potentially a bigger top than we saw back in September of 1987, which, by the way, was Fibonacci 34 years ago.
Wow, it sure was. Jeff, you're not going to believe this, but do you know what? I actually have found your charts. It just takes me a while. I'm not the sharpest knife in the drawer. Hold on one second, but I'm always able to feed myself. Hey, let's take a look here at this one about your Elliott count, because I'm always interested in that.
Yes. So the Elliott count that I've put out is on the right. It's kind of a blown-up version of what we see on the left. The left side of the chart is a weekly going all the way back to the decline in March of 2020 to present, and then the chart on the right kind of blows up that red box, and so we can see what's happened recently. And what we identified in really late August and into early September was an ending diagonal triangle, and that ending diagonal triangle is a terminal wave formation that indicates an impending trend change, and that's exactly what we've got. And then what we're able to do is count 5 waves down from the peak on September 2nd all the way down to the low that we saw around September 20th or so, which was marked as that wave 1, intermediate wave 1 low. And since then, we've seen a rally back to put in wave 2, and now we are in the midst of wave 3 down. A lot of people are looking at today's rally, and they're thinking, oh, this is a big deal. Well, it's not. We haven't even taken out yesterday's high. And 500-point rally in the Dow is nothing anymore. It's a percent and change, right? So we've seen these violent 1.5% kickback rallies, but the market is still down over 5% from its highs, and the peak to trough decline in the NASDAQ is actually down 8.5%. But we expect this to carry down to at least around the 4,075, maybe 4,060 area before this wave of the decline is done. And then we get into something that's a more durable sort of lateral consolidation or kickback rally. And then we expect the selling to begin again. This is just the beginning of a bigger correction that will take many months, if not years, to complete, in our opinion.
Wow. Well, we've certainly got a good start on it. Now, I posted the other one here, which is that cycle count on the Elliott. You want to tell the folks what you're looking at here?
Yeah, so, we've got basically 2 potential options. We think that there's kind of a good and a bad. We've put the good on the right side, and that is that we're looking for kind of a sideways move of around 10 or 12% before we find support around, say, 3,600 on the S&P 500. And from that level, we think we can rally to new highs if that plays out. The bad scenario would be that we don't get that that the sell-up's much deeper and takes us all the way back down to the lows that we saw in March of 2020.
Jeff, thanks for joining us, my friend, and we'll have you on again soon, folks. Jeff, huge Alpha Insights, a stand-up guy, and you're doing a terrific job, my friend. Please keep it up.
Thanks, Larry. Always a pleasure.
You bet.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Testing 1, 2, 3. Help, Al, are you there? Hello, does anybody hear me? Oh, what's going on? What's going on here? Okay, hey, that's all right. Everything, I got disconnected, folks. Listen, we got some important information here from Shane Smolian, thewolftrader.com, and it's also from one of our good friends, Sergio, asked about it. Where do you go to get information about the Federal Reserve and when they're speaking and stuff like that? Now, I posted it. It's www.federalreserve.gov, and then just news events. There's got a whole chapter there, a whole website for all that stuff if you're interested in doing it. I basically look at Bloomberg just to see when they're talking, try not to have anything going on while they're talking, but then afterwards, that's when I'm looking to do it. The euro is just taken off, folks. We were hoping it would, and it started to move rapidly. So make sure you put your stop at break even on the euro and let it rip, and then the beans are still going okay. And we're going to wait a day or two here before we take a look at the short side of the S&P again. But it won't be very long because this is a bear market, and we're having these tremendous, counter trend rallies, which you do and you can't do anything about them, but they do happen. Fortunately, we had Mr. Z on yesterday pointing that out. We were talking about the big ABCD pattern, and that's really what all I do, folks. I posted the pattern of the euro, I believe. I think I did anyway. No, I don't think I did. Let me put the euro, because I was going to do the talk about the Federal Reserve. There's the pattern in the euro. There's that ABCD, folks. Now, I know you think this chart is new to you, but I just sent this chart to you today when Basil was talking about the gold miners index, the GDX. If you were just to take all the names and numbers off of this and just give it to a college professor and see if there's any similarities between those charts, you'd be looking at the exact same chart of the euro pattern that we're having in the GDX. So if you can get that GDX down to 28.44, that's a very, very low risk trade. Now, do we know it's going to work? Well, we don't know that, but nobody else does either. But we know one thing: we know we only have to risk $1. if we get in it. That's what we're really looking at here. Now, here's the euro. You see the euro on Thursday, Thursday and Friday, same one, because this is Tuesday. Well, I figured that out all by myself. Anyway, you'll notice here that we had that beautiful 3 drive to a bottom pattern, the large ABCD pattern, and then we had the pullback. And that's what we got. Last night we had a perfect pullback, and now it's really starting to, move rapidly. And that's what we really hope that it'll continue to do. But here again, we don't know. But now we have some profits. So now we're basically in a risk-free situation with this. That's really what we're trying to do as we're looking at some of these things. So I hope that this type of thing. I keep pounding this stuff about risk control into you folks. Let me tell you why. For 4 years, Mark Douglas lived here. Well, he lived here in Tucson, but we shared an office here in our home here in Tucson. He would come over every single day, and Saturdays and Sundays too, because we were very, very good friends. And all I ever heard was every day was risk control, risk control, risk control, risk control, risk control. Those of you that know me really well or have been out here to visit as students and stuff, you know that my car, I've had the same license plate for 30 years, and it says no risk. And I really wanted to have a Fibonacci number, that would, say like 1618 or Fibonacci or something like that. I could never get that. So when I got my first new car here in '95, it was a little sports car. I was going to the DMV, and Jimmy Elder, who was my second student ever, was out here, I think, for about the 15th time to visit Mark and I. And we went over to the DMV to get the plates. And so we're trying to find a number that would look pretty good. And Jimmy came up with the idea of, by golly, why don't you just use no risk? You're always talking about it. So about 2 weeks later, Jimmy's still here visiting, and we get the license plate. We put him on the car. I go to get gas, and we're down by the university, and I'm filling up with gas, and there's this little teeny bopper there in her little Levi's shorts and her little half blouse or whatever it was and her baseball cap, and she looks at the car, and she says, "Gee, it's a cool-looking car." She says, "What does no risk mean?" And I said, "Well, I work out at the Davis-Monthan Air Force Base, and I teach the F-16 pilots how to eject in order to protect themselves in case something goes wrong with the plane." She said, "Oh my God," she says, "that is probably the greatest job I've ever heard. Would you like to go out for a drink someday?" And Jimmy was standing next to me, and I swear to God, he fell on the ground. We were laughing so hard. I mean, this girl was two years younger than the peanut butter and jelly set. So they always tease me about that, but that's neither here nor there. But that's why I have the no risk license plate, is because of that. So remind ourselves of that. Now we have a question about Tesla. Folks, there's nothing bearish about the Tesla chart. I don't care whether the stock market's going up or down. Tesla still looks pretty good. I mean, it's basically up a little bit today, but there's nothing wrong with the Tesla chart. Let's get it up here. If we get below 740, yep, there might be something wrong with Tesla. But right now, there is nothing in this chart that makes it look like, she was about, I think she was about 18 probably. Of course, at my age, 18 is that's way beyond peanut butter and jelly. Let's take a look at that. There's Tesla. You'll see we made the big ABCD. A normal correction in Tesla, folks, is $60. So $60 off of 810 takes you down to 750. If you go below 750 at some time, yeah, then you might say there's something not right with Tesla. But this is not the one that you want to be worried about. Now we've got a call coming in. Is that what it is? Steve is on the line for silver. Steve, what can we do for you?
Hey, Larry. Thank you for taking my call. There's a gap from, I think, about a year or maybe 2 years ago on silver around the, I don't know, I can't remember the value, somewhere around 20 or 19, something like that. If you pull up a chart of that, do you think we're going to get down to that, maybe to fill that? If you go back to, when we had that big break, we had that big drop off in silver, and then it rallied up. And I can't remember exactly.
It was July. It was July of 2000, and I'll show you the chart right here. I don't think we're going to get that low. I'll show you where I think we're going. And of course, if you pay more than a dime, you've overpaid. I think we're going to get down here to the 61% retracement at 2050. That's $2 lower. And
that's
that
what
would
I'm
be
thinking.
yeah,
somewhere right
two
around
bucks
there.
lower. Yeah, and I'd like to see him, take out the lows in gold one more time. Maybe below 1670, maybe get it even as low as 1580, something like that. But there's just too many people. The open interest is telling us that there's not a lot of people coming in buying right now, Steve. So I just don't see any interest in the silver. Every time it gets up, it gets hit in the head. So it's certainly not a good buy. That's for sure, at least from my perspective.
Not yet.
Not yet. There you go. Yet is the key word.
Yes.
Hey, listen, thanks for calling in, my friend. I really appreciate it.
Thank you.
You bet, buddy. Anytime, Steve. Bye-bye. We'll be right back, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks, and I posted a chart of the British pound. You notice we made that bottom there when the whole world was falling apart over there in Great Britain. It looks like it put itself together pretty quickly. I talked to Tom Hugard this morning, and they're having some problems getting gasoline for the car, and the stores have probably only 60% capacity filled. So the truckers are having, and he lives in Bournemouth, which is the far south. It's about 3.5 hours south of London by train. So I don't know about inside London. There doesn't seem to be too much a problem, except for some type of dairy products and meat or some time to get. But there's some problems, and we haven't had that happen to us yet. But there's always that possibility. We need to pay attention to it. I personally don't think that the inflationary thing is going to be nearly as bad as what some of the people are talking about. But again, I'm not sure, and I'm just looking at the charts. And frankly, some of these grain charts got hit so bad, with the exception of wheat, that they were very, very oversold. That's one of the reasons why they had the run that they've had. So remind ourselves that these things can change, and they change very often. Tomorrow, we're going to have Stan Harley as our guest. I haven't heard back from him yet. Thursday, we're going to have Tim Bost, and Friday, I'll either have Stan Harley on, or maybe even Mr. Joe DiNapoli himself, or Mark Leibowitz. I'm into contacting Mark. He lives here up in Sedona, Arizona, and I will be trying to contact him. He's always interesting. I've known him for a long time, and so that's what we're paying attention to so far today. So live every day in an attitude of gratitude, and may God bless, and live every day in an attitude of gratitude. And please, folks, do something nice for your neighbors, because, boy, there's people out there that are having a really, really hard time, and you certainly don't want to, bypass them if you can. Whatever you can do for them, try to do something, because not everybody has it as easy as some of us. So share the wealth, baby. Share the wealth.